it's time to do it. I'm gonna make it happen. Cheers. Hey, welcome to the Closing Beat, everybody. Happy Wednesday. How we doing out there? What? Are you just like watching? Hey, we're financial advisors here at Jazz Wealth. We do things a little bit differently than the rest, and we appreciate you guys hanging out with us here. September starts tomorrow, right? That is going to be our month of retirement for our clients here. Those of you that are focused on retirement, in or near retirement, we're going to go through all the geeky details there, so I hope you'll join us for that. If you are not one of our clients, I hope you'll check us out at jazzwealth.com because we do this for marketing, right? It's no secret. Anyways, I hope you'll check that out and appreciate those of you that did. Soon we'll be able to watch all of your dough, right? How about an advisor that could advise on everything? Just, like the rich people get, like your things that are expensive, your insurance bills, your equity in your business, your home, all that stuff as it piles together. How does that create that whole plan? So we're looking forward to that. We actually got to ask Doug where we landed on that because I think I don't recall where we left off with that, actually. Anyways, that's what we've got. If you look to the right-hand side of your screen, it's like Groundhog Day, right? Another down day in the markets. Just a little bit, though. A little bit less, right? We actually were positive for a little bit there, and overnight was sort of chopped around. There was really no excitement. Like I said yesterday, there's no economic news. There's no expected conferences. There's no talks. There's no Congress fighting about whatever. It's just kind of a quiet week, and so the markets are able to just focus on last week's news, which is rates needing to continuously go higher. So we end up the month of August. It's over, right? This is it, with about a loss of about 4% in the S&P there. If you look at the Dow is down about 3.75%. A lot of that coming towards the last end of this month, of course. The Nasdaq's down 4.8. That'd be your worst performer there with the biggest pullback, and the Russell holding strong, man. 1.8% on the Russell there. Remember that September is the weakest month of the year. I mentioned that, and I also was explaining how I show that to clients. Let me go back over here. This is our Notes from Jazz that comes out every week. And what do we have? There you go. So go up a little bit. Now you could see the whole thing. Here's the month of September. Well, it's all the months, actually. September over the last 100 years, the Dow is negative, averaging a loss of 1.21%. 40% of the time it is positive, so that's less than a coin flip. Over the last 50 years, same thing, just a little bit not as bad. It is the worst month over the last 50 years, and it's the third worst month over the last 20 years. Another way to look at it is just in a little cute little graph like that, if you want to see it that way. You can see there's just no comparison, right? So get ready for that. We have an already weak market going into a historically weak time of the year there. It doesn't bode well for the rest of the year. Not likely that we turn positive before the end of the year. Ran some stats for you here just so you could check out everything and how it goes. And hey, I didn't put you guys over here. Like to see you guys, man. Talking to a camera all day gets a little boring. There's you go. There's Harry, Matthew, MW. We got Joe in the house, man. Marco. All right, I love it. Okay, let's take a look. Just had a thought, right? We said, well, what happens if the market is lower through August? So January, February, March, April, May, June, July, August, the market is down. How does the rest of the year go? Do we normally have a full recovery? That seems unrealistic, right? And what percentage of the time do we then turn positive? Do we continue negative? What's going on there? So real quick stat here, just showing on a real simple chart. See if this works here. Here is, this should actually say rest of the year. Let's go like this for the future. We'll say rest of the year. I can't type today. So when the markets are positive, percent of the time positive when the markets are down through the end of the month in August. So year to date, we're just down, just exactly like we are this year. 58% of the time we finish with positive gains. That's not bad. It's just the worst out of all scenarios. So not very likely that we're going to just turn around, recover all the losses and turn positive. I'd actually be pretty worried if that happened. I would think that somehow we got a little overexcited there, and I'd be worried about that rally. Percent of the time that the stock market is positive after being positive already going into the end of August there, 75% of the time. So, strength begets strength. That's basically all that's saying there. And anytime, no matter what the case is, when the market is, wherever it is, up, down, sideways, whatever, through the end of August, the rest of the year has a 70% chance of being positive. So that's pretty good stats. That's pretty good stats. That's not so good, right? When we're down for the year, it's very rare for us to turn around and somehow just magically create some kind of gain. It's just, not to give you the bad news, but that's what it is. Now, for the market geeks out there, at the end here, once we cover everything, I'm actually going to go through a little bit more of the geeky nuts and bolts of how to analyze the September performance due to the weighting of individual stocks. So if you like that sort of geeky stuff, hang with me for just a minute. Let me get everybody else going here. If we look at the S&P here today, of course, we've got the continued pullback. We're under the 50-day moving average, and it was really a hodgepodge of positive and negative today. There was no sector that really stood out today as being the go-to for the day traders or anything like that. Materials, or I should say basic materials, had the worst performance. And the most consistent downside throughout the day. Consumer discretionary, oops, no, that's not it. Consumer discretionary comes in second place. But other than that, tech, you throw tech in there as well. But other than that, the rest of the market was, some good stuff, some bad stuff. I mean, if you're looking in tech in particular, you can make an argument for, we got to say Meta now, not Facebook. About a 3.6% gain there. I'd throw in Comcast as well, although that's incredibly weak. But then everything else, just kind of pulled that excitement out of the market. So Microsoft down 0.5%, nothing crazy. Apple down 1%, still pulling back, nothing crazy there. Amazon, same thing, lost another 1%. These are all coming back towards their 50-day moving average. I'm not going to say tech, but we look at Verizon, that made new lows, and I believe is the stock that is furthest below its 52-week lows. I'll have to check that out. And Netflix, small gain on the day. Again, going back to the individual sectors, communication services stuck out. There you go. It's going to be because of Facebook, Netflix, and the like. Comcast as well, as I mentioned. I think EA Sports now didn't quite turn the corner. It was stronger earlier when I looked at it, but this is, look, for any of you mid to long-term investors, what do you do with this? Right? Is there a trend to be had there? Can you say momentum is on your side? The bulls are excited about this? Nah, they've got a little rebuilding to do there, so not a big deal. When you look at the NASDAQ, it's a lot of the same. Apple, your Microsofts, Amazons, Tesla, they just kind of weighed throughout the day. There was really no chance of any real significant rally there unless those turn the corner. If we look at gold, I will maintain that gold is, the last place you probably want to look right now. It is not participating, not having a good time. Not that oil's any better. Oil fell 3% on the day, and that was, again, you would think the oil or the energy sector would be lower on the day, and it was, but not every stock was. ExxonMobil down 0.75%, Chevron down as well. Cortera was positive on the day, actually. Baker Hughes was positive, but really just a mix between some small losers, some big losers, and a couple gainers as well. So not much to say there. I'll point out, if you want to look at the VIX continues to drift a little bit lower there despite the markets pulling back. Not a lot of excitement going on there. A couple stocks that stand out for the day, Las Vegas Sands. I don't know if this breaks out, but that's about the tightest pattern you've got. To find a tighter pattern, you'd have to be looking at a stock that's going through a merger and it's just not trading. But Las Vegas Sands, maybe something there. That's a bottom of the watch list kind of stock just in case. PayPal's waking up a little. I have a hard time getting excited about that. Cardinal Health, 1% higher, 1.25%. In the healthcare space, this one gets the relative strength points because remember, we talked about this the other day, healthcare going that way. You got Cardinal Health going up. What happens when healthcare gets strength from a sector level? So let's say people say, I'm not really willing to invest in the index, but I am willing to invest in a sector. What happens if healthcare gets a little boost there? Well, Cardinal Health is going to get dollars purely from people buying the sector as a whole. So that's why you like to see those relative strength stocks. What else? There's not much. I don't want to try to sugarcoat the idea that there's a lot going on. You got the NASDAQ basically down 5% there. If we look at the sectors, just over the last month, energy is still the strongest. Can't see that, sorry. There we go. XLE is what we use for energy. Still the strongest, had a little gain on the month, just over 2%. And utilities were the only other sector. It's the exact same thing year to date. If you look year to date, energy is the strongest. Utilities just barely hanging in there, almost about to go negative for the year. But other than that, kind of brutal. If you're anything involved in tech, you lost considerably more than the market. If you're anything involved in healthcare, same comment. Real estate would be the same comment. It's one of the weaker areas right now. Consumer discretionary and communication services. So when you break the S&P, I did a video for this for clients. If you look in the video library, we broke the S&P into sectors so you can understand how people do top-down analysis. You look at the index, you look at the sector, then you look at stocks that are involved in each sector, right? So we'll cover a little bit of that as the month progresses, right? The month of September for our FinTips series, which are free on our YouTube channel, all we ask is for a subscription. If you hit the subscription button, that'd be great. But for the month of September, we're going to focus on those of you that are in your 40s. There's such an interesting time in your life, not to mention I'm right there with you, but an interesting time in your life because mistakes can't happen as much as they could when you were in your 20s and 30s. The dialing in of your dough has to start happening in your 40s. You can't be loose and kind of just flying by the seat of your pants with those dollars anymore. So we're going to focus on you guys a little bit. All right, stocks in the news. Let's do that so I can get to the fun things that I want to talk about here. What do we have? There you go. Netflix steals some people from Snapchat there. And the people from Snapchat, I don't know if this is a good thing, right? Because it's not like they did great at Snapchat. They stole people from Snapchat to help with their ad-supported offering that's soon to be coming out, apparently much sooner than expected. So that was that one. You got Bed Bath & Beyond. Now, 10 of the last 13 days, it has been either the best performer or the worst performer in the market there, Russell 1000. And today, down 21%. They're closing stores. They're working on different financing. Kind of smells like Kmart back in the day. Not that this is a Kmart, but holy cow. If you wanted activity, there you go with your activity there. And they reported earnings too. Sales were below expectations there. And they're really trying to shore up their financial position. You talked about the financing they got the other day. It's a rough time, man. That's a rough go for them. Those C-suite people are going to be earning their dough right there. PVH, this be Ralph Lauren and some other retailers there. Better than expected earnings. They did lower guidance going forward. The consumer is not willing to spend $30 more on a t-shirt than they were before just because it has a sailboat on it or something like that. So that wasn't good news for them. Chewy.com had less active members. Not members. They had less transactors. I forget the word that they use there. I was looking at it, talking with Eric about that. That was a miss for them. And the only positive side is the number of auto ships. The auto ships would be people that say, I'm going to Chewy.com and I'm going to buy this dog food. And my dog goes through it every month or so. So every month just send me new dog food. The number of auto ships went up 73%. And that is due to how they present it on their website. Very fascinating study if you're into that kind of stuff. So good for them, not good for the stock today going forward. CrowdStrike reported better than expected earnings. I did not get a chance to look in detail with their earnings. I wanted to. I imagine that the guidance was not what they raised guidance going forward. Their revenue is better than expected. So I missed what the negativity was about on CrowdStrike. I apologize for that. Tomorrow you got Campbell's Soup. Oh, Ollie's Bargain Outlets, Signet, I believe, came out early. Broadcom will be out after the close tomorrow, and that'll be the focus. That's the only earnings coming out after the close tomorrow. Now, let's talk about some fun stuff, and then I'll take your questions. Remember that in the S&P, it is not an even game, meaning there's 505 stocks, some of various classes, but you have 505 stocks. They are not equally participating at the same rate. You know that, right? We've talked about that, and that's probably something you already knew. It's determined by your market cap. So the bigger the company, the bigger participation that you will actually have in the S&P, meaning that if you are a sizable company, an Apple, a Microsoft, things like that, then you get to participate at a bigger level, meaning if Apple has a bad day, you drag more on the S&P. If it has a good day, it rises up there. Remember, I shared with you just a minute ago that as the markets in September, well, it's the worst month. Right? There's nothing about that. All you can do is just go by history, right? We're expecting a rough month. Hope it's not the case, but it's what happens. So it got me thinking, is it because the top 5 stocks are really weak, or is it just because everything's weak? Right? So we wanted to zoom in just a little bit further. To give you a little insight here, if I go over to the charts, The following stocks, Apple, Microsoft, Amazon, Tesla, and Google, both classes of shares there, they rank as the top 5 participants. Apple, 7.25%, Microsoft, 5.85%, Amazon, 3.85%, Tesla, 2.08%, and the combination of both classes of Google shares add up to 3.75%. Put all that together and you got over 20% of the entire market is made up of those 5 stocks. You can get carried away with this and watch what it takes to get to just 25% down here. You don't have to add very many more stocks. So we said, all right, these stocks make up over 20% of the S&P. There's no way the S&P consistently goes lower without these stocks going lower with them. It's very, very difficult because they participate so much. So what we did is we said, well, in September, what's the average performance of every single one of these stocks? Let's take a look. Apple, average performance, it's the worst for Apple, minus 1.6%. Alphabet, believe it or not, is perfectly flat. The average performance is 0.00, right? Amazon, that's not a typo either. Amazon, average performance is negative, but not too bad there. Big drawdowns from Microsoft and Tesla. These are weak months for these stocks. Aha, right? Starts to shed a little light on why does the market have a weak September? Well, you've got most of the stocks either not moving or really, really pulling back there. If we do the flip side and we say, okay, well, September's fine. We know maybe it's going to be tough. What's the best month? Does it happen to be October? No, it's July. So the best month for these stocks, what I did is we put the weakest ones down here. So this is just the same as the other chart. It's just squished because of the best month here. So Apple's worst month, September, minus 1.6% on average. July, 7.8%. Google or Alphabet, 7.9. Amazon, 7.8. Microsoft, 4.2. And Tesla, 7.8. So the excitement or the idea of the market having some support in July, okay, you can make that argument. No problem. Go back to the beginning of each one of these stocks and find out their average performance. You can actually make a case for July having a hard time falling apart unless these stocks fall apart too. It would be unlikely because they don't normally fall apart there, right? So we got the S&P here coming off of its best month since COVID, I believe. Join me over here on this chart. What I'm doing is just plotting each month on a chart. That's a month, that's a month, that's a month, and so on. You come over here, you say from June to July, you got a 9.2% increase in the S&P. Well, just visually, look at that. Say, well, where else have we seen that? Not here, not here, not here, not here. Bam, right there. The rally from COVID, March to April 2020. So we're just coming off the best rally we've seen since COVID, and now we're going into the worst month potentially, right? So if we were to fall 4 or 5%, which, well, we've already kind of fallen that, right? So we're basically down here if the chart would plot. It's still a massive rally. So now put that together, go over here and look at the S&P. You say load. Okay, there you go. It loads up. And you have the pullback already happening. We're already in the worst month here. Do you not expect now there to be chop? You don't expect the markets to just fall apart and have this historically, horrible month because of the way they are. I bet you that doesn't happen. I think you see downside get bought up, but people know there's no reason to be aggressive. We all know September is the worst month. There's a lot of fear that if I buy, I'm not buying at the best possible time. So when you get these rallies, they're not going to be long-lived, massive rallies. So number one, you look at pullbacks and say, I think I can use those for buyable pullbacks. I believe other people will join me if I buy a little bit as the markets fall. Cool. Number two, I don't have to buy a lot because I have no fear that the market's going to go all the way from here back to here or anywhere near there. There's no fear, right? Anybody want to make a friendly bet that doesn't happen? I'm with you, right? It's not going to happen. So you have no fear to invest large sums of money for the long term, but you do have the confidence you could buy just and kind of scale in there. I'm not telling you what to do. I'm just saying put yourself on both sides of the equation. Now you're confident. Now you know what you'll do if the market goes lower. You know what you'll do if the market goes higher. You're going to laugh at everybody like Bed Bath & Beyond there. You're going to laugh when people chase that higher going, it's not going to stay there. There's no good reason for it to stay there. There's no optimism to that degree. All right. So different way to look at it. Just kind of wanted to break down again, index, sector, and the stocks that make up the the sector in this case. So what we did is we went index. Wow, what makes up the index? Forget the sector for a second. Look at the index. Oh my God, it makes up 20% of those 5 stocks there. Rather interesting. I appreciate those of you that hung out with me that like to see that sort of fun geekiness. If you have any questions, I will attempt to answer your questions here while I can. And then we're going to start getting ready for our September retirement series here with our clients. Make you all smarter. I'm talking the good stuff too. We'll start with a review, right? So we'll go over and we'll make like a mock portfolio, and then we're going to go through and just pick it apart. How do I do, and how does Eric do what we do when you can't see, right? We want to show you all that stuff. How do we make the decision that a conversion starts 2 years from now, goes for 3 years, then stops? How is that the most efficient versus just doing it all in 1 year or over a couple years? Gonna have some fun with that one. Yeah. Pandemonium likes the geek stuff. I like it too, man. Matt, how does Jim Cramer get away with buy-sell recommendations on the TV show, even if he's not a professional advisor? Doesn't seem appropriate, uneducated. Well, he's not making recommendations for the general public. He's making recommendations for his charitable trust. He's also not a registered advisor with the SEC. So he is not beholden to those rules like I agreed to be. Craig says, why did all the ocean freight companies tank so much? They're killing your dividend portfolio. I didn't look over there too much today, which is kind of interesting. There must have been some news because the freight rates actually come back to like, they've come back to almost neutral, not cheap, but relative to that big spike that they had. So I don't know exactly. You don't know, man. You think inflation's going to fall off a cliff pretty soon? Car prices, oil and gas. I'm with you on the car prices. Wholesale car prices is something that we track ahead of retail car prices, and they're already down 11%, just over 1 month, which is a record for them. Mark says, do we have any physical metals? Not here anywhere. Nope, no physical metals. Trent's sitting on his hands. I like it. Norbert's here, man. How we doing, man? Caught you live. Hey. T says, a few weeks ago you said no rush on buying growth. Do you still feel that way after a pullback? Also, what about the semis almost lows again? Yeah, a few weeks ago you say, well, what's the point in buying growth there? Now you have pullbacks. So I put this in the letter, our Notes from Jazz letter over the weekend. Now you look at this and say, all right, I want a piece of this. Right? I waited, I watched the rally, we pulled back. We have a significant base that we've built on. Why don't we want to buy a piece of that here? So I'll keep those same comments as well as what I just said a minute ago. Yeah. Oh, Doc, you got blocked, man. You see, Doc's got, we can't. Yeah, I guess that word got blocked, Doc. That's crazy. I appreciate the comment. Yeah. Finishing another quarter, will there be stocks moving out of the S&P and the Dow? So how are those announced? There's none at the moment. The only one is in the S&P 600. Avid is actually joining the S&P 600, but that's tomorrow actually, right? That's it. There's no S&P 500 changes. We have those. I usually get those and that's interesting. Oh, Planetronics got bought out. That's right. Okay, so that's why they're switching that. But you usually get about a 3-week heads up on that, and there's none on the chopping block at the moment. Yep. Yeah. Spending some time and money in RC there. Oh, there you go. Have an extra drink for me there, right? Get one of those fruity drinks. The music in oh man, you putting me on a cruise. Oh, went on a cruise just before COVID, and I swear I think they knew COVID was coming. I'm not a conspiracy guy, but how aggressive they were being about wash your hands and come on over here, stay a little bit apart and stuff. This was before COVID, before we even knew it was happening. This was July the year before, and I don't know if they normally do that, but I was like, why? It's almost like they know someone's already sick. They're really pushing this. They were very nice about it, but wow. Yep. Yeah. What do you think about the China deal? If you're talking about the audit practice where they're going to be more transparent about their numbers, you have to expect China, they did agree that they will provide these numbers. I think to what detail is where the argument's going to be had there. I don't know. And I don't think we have chosen anybody to pick on just yet. with the new law there, so I'm not sure. Will the market rally if we don't do a 75 basis point hike on 9/21? I'm going to guess 50 basis points. I think they have every right. They've already set the tone for that. I think it's just going to be 50. I haven't looked at the betting odds or anything, but yeah. Great info on a September performance. Thank you. Also hope you got the place cleaned up for Mama Jazz. Mama Jazz did the cleaning up, I believe. Actually, our desk is almost done. We got we're going to go back over there soon. And thanks to Doug, we got that built up the way I was always wanting to do it in the first place, man. You'll see. You'll see. All right, I'll wrap it up there. I appreciate you guys hanging out with me. Now I've got a cruise stuck in my head. I'm not going on a cruise. It's gonna be a while before I do anything like that. I like to work. Anyways, I appreciate you guys following along, watching us here. We'll be back tomorrow, and yeah, that's all I got. Appreciate it if you hit the subscribe button. That helps us out a lot. All of you that have, fist bump. See ya.